Finally, look at the impact of behaving unethically. So what are the consequences of unethical behaviour? So if we breach the code, if we do things we shouldn't be doing, what are the potential consequences? So we've mentioned throughout this lesson impacts on organisations. In terms of us individuals, what could happen? You could be fined. You could no longer be a member of a professional accountancy body. The professional bodies such as ACCA can expel members if they do unethical things. And there can be the loss, obviously, of your professional reputation. You don't want to be seen as someone who broke the ethical codes. It could mean it's very hard for you to get extra work in the future, etc. Most seriously, there could be prison sentences. If there is fraud, if there are things like money laundering, there is the potential of prison sentences. So it's very, very important that organisations have ethical principles that they use. They make sure people are adhering to ethical codes and that they have safeguards in place where there are ethical issues. So here's an example of unethical behaviour. Enron was an American energy, commodities and service company. It had very poor ethical values and corporate governance, and in the end, it resulted in its downfall. It went bust and it was a huge corporate failure in America. In terms of professional behaviour, management ignored advice. They continued disclosing a financial position that was incorrect. In terms of professional behaviour, the CEO and CFO paid themselves large sums of money when the company was on the verge of bankruptcy and they knew that. In terms of integrity, whistleblowers were encouraged not to come forward. So people that were concerned that there were things going on were encouraged not to do anything about it. And there was also a sham trading floor set up and furnished. So executives claimed not to know that that existed, but I think it's highly unlikely they didn't. And it was set up as a sham to show that there was stuff going on that actually wasn't true. This was a huge corporate fraud. In terms of professional competence and due care, well, the board didn't fulfil their fiduciary duty to shareholders because they weren't making sure they were doing things ethically. And there was an inadequate oversight of key business transactions and compensation of executives. There weren't enough controls and safeguards in place to pick up on the fact that some of these business transactions were not correct, they were fraudulent, and that executive compensation was encouraging this very reckless corporate behaviour. Also, objectivity. There was a failure to prevent and disclose many conflicts of interest. There were all sorts of issues with Enron around ethics. It wasn't being run properly. There was a huge corporate fraud and there were many, many conflicts of interest. For example, the audit firm was on site at Enron an awful lot of the time, had an office there. That to me is a huge conflict of interest. So we're going to look at a question now to kind of round off this session. We have a trainee accountant who's preparing a first draft of financial statements for a company they're employed by, and they received the following email from the finance director. It is vital the financial statements show a favourable financial performance and position. Bonuses are based on financial performance and you will receive a sizable bonus. I hope you will comply with my request and I will be carrying out your performance appraisal soon. The accountant then discusses the email with her friend who works for another company. So discuss any ethical issues that may arise here. So what we need to think about is what are the issues, what's the situation, what ethical principles does this potentially affect, and what safeguards could you have? So thinking about professional behaviour there, the accountant here is being told to show a certain position in the financial statements. So that isn't objective. They're being told show a favourable position and performance. That could bring the profession into disrepute if the accountant does what the finance director is saying. In terms of integrity, you could be using inappropriate accounting estimates to maximise profit. So the accountant might be looking for things that they can do in order to maximise that reported profit. Things around accruals, for example. For professional competence and due care, well, the accountant is a trainee. Do they have the appropriate qualifications to prepare this financial information? Have they got enough experience? Or could they make a mistake without realising because actually they're not at the right level to prepare this information? In terms of confidentiality, the accountant then speaks to their friend. Well, that breaches confidentiality. It's not really something that they should be doing. And they have a financial interest as well due to that bonus and appraisal. If you are told by your director, you will get a bonus if you show this, and we're going to have your appraisal soon, so we're going to look at how you've done. it definitely gives you an intimidation threat that someone is saying to you, do this or there will be adverse consequences for you.